Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Good to see you all. All right. So, we have the continuing saga of the FOMC all week. It's actually not been as much volatility that we've been dealing with in terms of the equities, the indices, as it has been a little bit of the hesitation that we, for example, saw yesterday when the markets were just stuck in a range as we wait on these events. So it was kind of interesting as we wait on this slew of speaker after speaker, markets were sort of stuck in a choppy, ugly range. Today, we don't have as many, but who is speaking? Mostly Williams, right at 9:30, really right at the open. Thanks a bunch. But anyways, you can sort of look at Williams as just below maybe Powell in terms of potential impact on the market. So we have that. We have natural gas storage numbers coming out. We have Evans daily. And then we go into tomorrow with Lagarde. And again, just a whole slew of FOMC members. It's the way it's been this week, but it doesn't mean that we don't have opportunities. I think that there's a number of trends, not chop. I was mentioning to the folks, was it in the mastery or the futures room? But I was just mentioning that if your watch list is comprised of mostly chop right now, in fact, if your watch list is more than 25% choppy names, unless that is your focus, if that's your jam, if that's where your best trades emerge from, that's fine. But for most traders, they do better in trending markets. I know for me, when I start finding myself looking at choppy markets too much, and I'm not seeing those nice little double green dots at the bottom of my screen, I know that I've wandered too far away from the type of market behavior that gives us the best probability. So, just kind of check yourself every now and then. If you need to course correct, do it. And let's jump into your questions. All right. Hey there, Michael. How are you? OXY and ORCL, two of the trades from our live trading. This is the final week of the live trading. There's a few more setups that I believe we're going to end up with here in the next day or so. And for those of you in the live trading for the ETF formula class, I think between today and tomorrow, we're going to be setting up some of the trades that I'm looking for going into the remainder of November. So definitely keep an eye out for that. And OXY and ORCL were two of the handful of trades that we have. Now, I did a pretty thorough breakdown of the crude oil market in both the free and the premium video. So if you haven't checked it out, one of the things that I find helpful for me to do, and I get great feedback from you all, so thank you for that, is when we revisit an idea that we have been talking about, and not just when it's a profitable trade, but what happened? Oh gosh, hang on. I'm going to put the giant mug of coffee somewhere. All right, there we go. So not just when it's a winner, but when it's not doing what we want it to do. I think that's where, as I like to say on this side of the mic, it's so valuable for us to revisit times where, I've been doing this for a really long time, but of course I lose, right? But it's not just the losing. It's how bad are you losing by? What's the chasm between your entry and your exit? How much of an impact on your account is that loss accounting for? So I dove into crude. Now I bring oil up because my exposure to Occidental and Schlumberger, wasn't fun. However, as many of you pointed out in the mastery, Twitchy, I'm talking about you. It's really, really good to not just look at the candle and go, I know that's momentum and movement against my position, but rather quantify it. And I think at some point yesterday, one of our members said, I'm down on crude. I think it was 9%. That's still well shy of where we would cut the trade. So I've just got to sit through to see if this is basically crude oil's last dance. Yesterday, we got hit with the SPR rumor again. So that thing's coming around like a merry-go-round. We got hit by SPR. It was something else. I think, I mean, anytime we have a move in crude that accompanies sort of an uptick in COVID numbers, that's not that surprising either. So I think crude got hit by both those. And then also, and here's what's so interesting about the way markets move. Our inventory numbers, this is data. This is not supposition. This is not a rumor. This is not something that's down the road. This was measurements taken, impacting the market. Yesterday, when the crude oil inventory number came out, that EIA number said there was less inventory. That's bullish. So we have these two bearish scenarios on one hand, and then we have this bullish scenario on the other, and we can see which one. So, keep your stops in mind. Sometimes it's best not to stare at the big candle moving against us because it looks like a stick of dynamite sometimes, right? That red candle. Look at the percentage of unrealized loss, the heat, and just make sure you're sticking within that. So that's the way I look at OXY right now, Michael. It's a crude oil story straight up. Okay, then there's Oracle. Now, Oracle is a long position that we have. It's moving fine. It's, maybe not the sexiest thing out there in the market, but I think wins are pretty sexy. So this is moving along nicely in our favor. I don't mind if a market just doesn't go straight up, as long as it's, for the most part, pointed in the right direction and making higher highs and even better, higher lows. We're fine. So ORCL is well on its way. You can see the two alert levels that we had for the trade. And thanks for the question, Michael. All right, next up is AMZN. Hey there, Bala. Amazon, let's look at it. It's almost the end of the year, right? Can you believe it? Let's look at Amazon in its whole year look. I will tell you, I have given Amazon almost none of my time throughout the year. Not that it didn't have some cool trades, but look at this. I mean, look at this movement. That's what I think about. I look at Amazon, I don't see Amazon. I see Dramamine. And so I think it's really important to avoid, by and large, these Dramamine markets. Now, Amazon as a part of, let's move up one notch from the stock to the sector. Amazon is really an XLY story. Consumer discretionary. This has looked better. I don't have this feeling of nausea and the need to find the horizon when I'm looking at this thing. I know that there's better structure here. I know that there's Amazon exposure. So I would be remiss if I said there's anything that I'm even remotely interested in Amazon, although seeing how the overall tide has been moving higher, we can see that in the NASDAQ. It's hard for me to want to short Amazon. And if I look at, let's see, 1, 2, 3. We're right there where the more aggressive pattern using grab and propulsion is confirming that this is a very fresh uptrend. And that pattern will oftentimes, actually almost always, precede, or at least it'll form even without the double green on the JT multi, which is a more conservative way of identifying a trend using the 8, 13, 21, and 34 EMAs. So there's a dip buy opportunity here at Amazon, but I won't kid you, Bala. It's not been on my radar really in any significant way all year, and I can't say it's really moving up the charts for me now. But XLY definitely is. All right, thanks for the question. XLB, even though it's on a major holding of any of the indices, absolutely, Tom. Is it watchable? Oh yes. Specifically as of, well, if you want to get specific about it, since the third, fourth pullback buys. So if we're going to see more movement lower here on the XLB, I would not only look at this tide, I would look at the individual stocks within the tide. So I'm going to bring up the multi, I'll bring up XLB, and I'll look at what is tracking like XLB, meaning double green. And I'll also look at what might be an addition to or an alternative of playing the tide as opposed to an individual boat. But I like this. I like this look. So yes, it's absolutely watchable, as are double green stocks within the sector. So you got it. Just need a pullback. Now, question is, do I want to go with the 13 or the 21? 13 would be super aggro, but the 13's got the assistance of the VWAP. 21's usually more where I like to get involved, but there's probably some justification of looking at XLB around the 13 for a pullback. All right, so next up, Nikolai mentions, Raghee, I know in terms of seasonality, UNG is on its last leg. It sure is. We talked about that a couple weeks ago, so great point. Considering the cold winter we're heading into, doesn't UNG get a pump? Well, look, winter's cold. I'm a Florida girl, so I hate cold. I hate it. The thing to remember about winter, as far as the way that I look at trading natural gas, trading heating oil, is we need either a new forecast for winter, not just assuming winter is cold, therefore natural gas should move higher. That's already factored in starting in August. But are we seeing a harsher than expected winter? Are we seeing what's known as the heating degree days increased by the EIA? That's what we need to keep in mind. So unless we get one of those other two things, remember, the winter is cold, the winter is coming, gets discounted in August. That means at the latter end of summer, we're already doing that. So you're absolutely right. So if we get another push, it's going to need to be something new or increased expectation of harsher weather. All right. So I don't know that it does. We need one of those things. We need something apart from the seasonal that's already been factored in as of late summer. So great question. Thank you for that. Garrison asked, could I please take a look at FOXA? So if I'm looking at Fox, this is interesting because it's been an uptrend. And now I would say this was congestion moving into consolidation. What I would say here, I would like to see is resilience above the 55 and more compressed grab candles setting up a squeeze to the long side. Am I going to trade it? Probably not. Kind of going back to what we mentioned at the onset of the show, which is if I find myself looking at a watch list that really has more than a quarter of symbols on it that are non-trending, I'm losing sight of what I know is a better environment for trades. And for most traders, it's going to be uptrends. So definitely bullish bias, but maybe not near the top of the list. But yeah, look for a congestion to consolidation breakout, which really probably more commonly would be considered a triangle. So look for a triangle type breakout on that one. All right, next up, TT asks about IYR. Sure, so I usually look at IYR and XLE and IYR. I'm trying to remember the liquidity on the option chain on this one. Same thing with XLRE, same thing with the stocks within them. Buyable on dips. Now, do I want to buy this one on a dip? Here's where it will be challenging. Not wrong, but challenging. Is in this case, we are dealing with the highs in IYR just right overhead. So as much as this could be a buy the dip, this is probably going to be a potential breakout as well, meaning we're going to have to see not just a pullback buy, but think about just how little space there is until you get to the resistance of the highs that we have. In other words, By the pullback in the wave, call it 109, but then all of a sudden you've got 111.20 to 111.50 right in the way. So the follow through to the first target, not going to be impressive. What you're really, the gem of this trade, if it were to follow through in this way, would be breaking out to higher highs. So if we hit one of those two Darvis after the pullback, at least you can cover your downside, but you really need a breakout to see some good follow through. But good structure, good structure. Gypsy Jones asked, does it matter what the chuckleheads are talking about or just that they are talking? Good question. Really just that they're talking. However, if they start talking about inflation, if they start talking about headwinds, they start talking about those buzzwords that we know can get the market moving, if they sound more hawkish, if they sound more dovish, if a dove sounds hawkish, if a hawk sounds dovish. So I won't say there's not a nuance to also listening to what they're saying, but for the most part, it's just that they're talking. Yeah, to your point. Yeah, it's just that they're talking. So, all right. Next up is looking at XOP for a crude oil trade. Investing. I see your comment about crude. Yeah, I think a lot of folks took heat. I did too. I spent about 4.5 minutes talking about that in the free video. I took heat too. It happens. Yeah. So I agree with you. Be careful. And so with that being said, XOP got to be careful. I would say let's be patient. And as much as energy trades have been great, I mean, my gosh, probably one of my biggest trades at the second half of the year since August has been natural gas. I think we are 6 or 7 times, 6 or 7x a winner on that one. So can't be angry at energy, but there's a good chance that we're running into some bumpy price action, just not the smooth waters that we've had. So yeah, let's be careful. I think there's always a temptation to want to get back in to markets that have been very good to us because you think, last time I was in this market, UNG or FCX, or I'm just trying to think of some recent entries and wins. We want to get back in them. I had that with TLT. I had that with bonds. Bonds were really good to me on the way up and on the way down. I didn't want to let it go. And then sometimes the structure just says, keep away. And it's hard sometimes to do that because recency bias tells us, but this has been such a good symbol for me. But it's not the symbol that's been so good to us. It's the environment that's been so good to us. So if we don't fall in love with a symbol, meaning bonds or Tesla or the S&P, whatever, instead fall in love or seek out the environment that we tend to win in, we're going to be so much better off. So I've got to give it a little bit of a break. Gypsy Jones, I've got to definitely give it a little bit of a break. So, and as far as the price gouging narrative, right. Again, there was so many, crude oil got inundated with so many different unscheduled sort of narratives that, it was really heavy. It was really heavy in that regard. I agree. All right. So next up is, as far as some of the comments on UNG, EIA saying 553 average of, maybe that is where we end up. I don't know. I'm just trying to play out what's left of, in Moneyball, in Moneyball, y'all know I love Moneyball. I'm a Moneyball trader. Just get on base. I look at natural gas the way there's that scene with Brad Pitt. So he's talking to the actor that's playing David Justice, and David's in the batting cage, and he just tells him, I want to squeeze that last ounce of baseball out of you. He was at the tail end of his career, right? I look at Natty Gas and I'm Brad Pitt. We're all Brad Pitt, and this market's David Justice. And we just want to squeeze that last bit of whatever lingering bullishness might be there. So, where it goes from here, I don't know. I think the probability is still higher, but I want to acknowledge we're just squeezing that last little bit out of natty gas. You know, so I think it's still a valid buy. I think crude oil is still a valid buy, but we're losing the structure and the predictability and that wonderful organization that we have in trends, right? If we take a look at Apple, sure. And I'll be jumping into the futures room in just a moment. We're going to take a look at some, of course, crude oil, maybe some bonds, US dollar, which we've been long in. And we're going to do some day trading here in just a moment. All right. So Apple, look, if the Qs are heading higher, if the XLK is heading higher, this is really going to be reminiscent of sort of what I talked about in crude oil yesterday. It's not that I'm not bullish. Of course I'm bullish. Qs are moving higher, NASDAQ, XLK is strong. I'm not going to short Apple. I don't hate my money. I know a lot of you don't either. However, it's so important when we have a yellow environment that we remain much more conservative about our zone, that we wait for the dip, because in the waiting for the dip, we're reducing our cost basis. We're reducing our risk as a percentage of cost, and we're trading closer to the point of validity for the trade and the trend, but there's no trend here. So I think what's important is not that Apple's moving higher, but where did it land on your radar? Where did it end up in the crosshairs? And for me, it's those pullbacks into the wave. So the first step is direction. The second step is what's the zone that you get active in? That's our trigger. So I like Apple, but specifically on the 10th and the 11th, and even in the weakness of the 12th. After that, because once it starts moving higher, train has left the station. All right. Thanks as always for being a part of Charts and Coffee. All right. Enjoy your Thursdays. Let's get after it. I'll see you tomorrow. Same time, same station. Be good to each other.